So welcome everyone to this next module, profitable portfolio design. We have so many people that are coming in right now, which is fantastic. Let's say g'day, Brian. Thank you, Ep. Appreciate it, Ep. Thank you, Rebecca. G'day, Martine and Eva and Laurie. Hello, Debbie. Thank you. I very much am, Debbie. Thank you. Thank you very much. Hello, Roger. Hello, Rebecca as well. Mike and Maureen, g'day to you guys as well. G'day, Paul, Petra, Liz, Ep. So many people coming in. Love to see so many familiar faces as well, which is great. Some people in the chat saying they've received the book, which is awesome. If you are here live or you are watching the recording and you are yet to receive the book, obviously, if you've just ordered it today, you're not going to receive the book. But we've been advised that by the time it's ordered, you should have it within 5 business days. Within 5 business days, that's what we've been advised off Amazon. So it should be even quicker than that in theory. But yeah, hopefully it looks like people are getting the book, which is fantastic. Thank you, Andrew. I appreciate it. Thank you for the kind words about the book. Yes, very proud of it as well. Awesome. All right. So what we're going to do, we're going to go through this module here. I've got your question there, Ep. Hold that question till the end of the module, and let's cover that then. Let's answer that then. So ask me that at the end of the module. Any questions that we've got, guys, because we are doing the recording. So if anyone listening to the recording, we want to flow through this module, and then we'll answer any questions at the end of the module. So thank you again for being here. And as I said, it's profitable portfolio design is what we're going to be covering. And yes, this is step number 3 in the crypto pentagon, also known as just portfolio. Okay, so this is where I guess, as we've kind of gone through the steps and you would have watched the cycle video, and that is about, where you are potentially in the cycle, where we've been, where we're going. Narrative, it gives us an idea of the different narratives that there are, the different coin choices, the different projects that there are out there. Obviously, we have the bonus module number 3, where I literally share with you all my top 10 coins for the winning portfolio for this upcoming bull season. That's obviously as an added bonus for everyone who is bought the program. But now this is kind of where I guess the saying is the rubber hits the road with portfolio, because this is where we can design a profitable portfolio and be having and keeping this long term, because essentially what we're looking at here with Crypto New Rich is being able to utilize Bitcoin and cryptocurrencies as long-term investments. Now, we want to ensure, though, that we're always adapting to market conditions. We're always adapting to the market cycle. So at the moment, the cycle tells us that we're still in the 4-year Bitcoin cycle. Things are still tracking exactly where they're meant to be tracking as per previous cycles. But at any stage, that can change, right? And as it does, we need to adapt to that. But right now, things are pretty much playing out as per the Bitcoin playbook, which is fantastic because we've seen it all before. So hopefully we end up with similar results at the end of this bull market. So let's get stuck into this. So let's be very clear first, okay, what the ultimate goal here is. And I mentioned this plenty of times in the book, okay? The simplest crypto investment portfolio is quite simply buying yourself some Bitcoin and just stacking it, right? We call this in the industry stacking sats, also known as Satoshis, yeah? Stacking Satoshis, stacking sats. Now, what we mean by this is quite simply dollar cost averaging, or like I like to refer to it in the book, feeding the beast consistently, and over time, getting more and more Bitcoin, right? Now, just purchasing Bitcoin, obviously, that won't make you as much money in a bull run, potentially, as diversifying into other altcoins. But ultimately, we need to understand that the ultimate goal in Crypto New Rich is he or she who has the most Bitcoin wins, right? So ultimately, what we want to be doing is, if we are diversifying into other cryptos, into other altcoins, we're ensuring that those other altcoins perform at a better rate than what Bitcoin does. So then when we do get to the top of the cycle and we decide to take our profits, we can go back into Bitcoin at a point where we would have more Bitcoin than what we would have had if we just had purchased it at the bottom, right? So to give you an example, let's say we're at the bottom of the run up right now. Let's just use that as an example. So we're at the foot of the mountain. Currently, as I'm speaking, as I'm recording this video in August 2024, Bitcoin's trading around 60,000 US dollars. Let's just say, for argument's sake, just as an example, Bitcoin 3 times in value by the end of next year. Let's say it gets to 180,000 US dollars, right? What we are essentially looking for when we create a profitable portfolio design is coins that do a better projection than a 3x multiplier, right? So if we can get into coins that do a 5x, 10x, 20, 30, 100, right? Then what that's going to do is it's going to give us the ability at the end of the bull market to go back into Bitcoin and be able to purchase more Bitcoin than what we originally would have been able to do. Now, a lot of people would potentially look at this and say, well, that's taking unnecessary risks. But in my opinion, if you are measured with the altcoins you go into, I think it's absolutely a very key and pivotal move that you can do to increase the amount of Satoshi, increase the amount of Bitcoins that you actually own. The winning strategy that I talk about in the bonus module 3, and I'm going to talk about today as well, it has been, for me, myself personally, a very highly successful strategy over the last couple of bull runs, and I don't think this next one will be too much different. From the data that we have and being in the right altcoins, it's going to outperform just about every other investment in the long term. We already know that. That's an absolute no-brainer. Bitcoin's the best performing asset in human history. It's completely outperformed every other investment. So it's essential that when we're doing this, we're entering into these positions and we're entering in them with conviction. Exactly right, Michael. We want to be buying the dips along the way. So let's talk about stacking sats, yeah? Let's talk about that. So what does it mean? Well, what it simply means is that it means continuously buying parts of Bitcoin, which are Satoshis, when you receive new income. So let's say you get paid every week, right? I'm going to use an example for myself. I used to get paid every Thursday afternoon / evening. So what did I do before I went to bed on a Thursday evening? I purchased myself some more Bitcoin, Ethereum, right? Some more cryptocurrency. I'm not saying that you should be doing that, and that should be your first purchase when you get your weekly paycheck. But that's what I do, and that's what I've been doing for a long time. And now, obviously, not having a full-time job as such. But, every Thursday I stick to the same method and I dollar cost average into the market, or like what I like to call, and you would have seen this in the book, feed the beast, right? Consistently feeding our investments to build it up. So stacking sats and purchasing small amounts of Bitcoin over a long period of time is a fantastic way to keep building and keep building, right? So what we want to do is be responsible, of course. So as you can see on the right-hand side here, we want to buy Bitcoin with a small proportion of our money that we receive each week, each month, whatever it may be, and keep the rest for living expenses. Yeah, keep the rest. Make sure you're paying your mortgage, your rent. Don't want you living out on the streets just because you're buying Bitcoin. But that's what we want to be doing. Very, very simply, we want to be choosing an amount. Now, whether that amount's $10, $20, $100, whatever that is, each week, each month, and purchasing more Bitcoin or crypto. Okay. So this option of investing Bitcoin is paying off, and it has been in practice, in reality, since Bitcoin's earliest days. So, as I said before, Sats is the short form of Satoshis, and it's the smallest divisible unit for Bitcoin. Okay, so the coin, just to be clear, Bitcoin is divisible up to 8 decimal places. Okay, and up to 8 decimal places, and then each of those decimal places up to 8. Once you get to there, each of those are called Satoshis. And that's why we call it stacking sats, because essentially it's stacking Satoshis. So that's what we want to be doing, right? He's getting a little bit of Bitcoin each week, a little bit of Bitcoin each month, whatever it may be, and accumulating it over time. Now, we're going to touch on the portfolio design later in this module. If you haven't already watched module 3, which is the bonus module, obviously I talk about my winning portfolio design, and I give my personal top 10 coins that I like in this particular market. But if you haven't watched that already, that's fine. We're going to cover a lot of that here in this module, just not covering the actual coins, but we're going to be covering the strategy here in this module. But this is essentially what we want to be doing. We want to keep stacking sats. So let's look at the VC approach in regards to investing in crypto, right? And this really is based around your risk profile, right? So when I talk about a risk profile, some people have a low risk profile, medium risk profile. Some people have a high risk profile. It just depends on, often depends on where you are in your life. It depends on, the method of investing that you want to do. We've got to be clear that if we're going to do, for example, the winning portfolio strategy, which I'll be sharing with you guys in just a few slides, that there's still a 20% in high risk or / low market cap coins, right? So there's even doing a strategy where you're spreading the risk out over 10 coins, there's still some risk involved, right? Now, the decision is how risky you want to go. So in a second, when I show you the winning portfolio strategy, you'll see that I've got Bitcoin as 40% of that. And then after that, it just depends how risky you want to go, right? So I'm personally doubling down in this area. I'm willing to take some risks to get results that others won't get. Okay, that's what I do. I believe in this theory. This is the theory that VCs do. Often they'll invest in a young company, but they don't just invest in one. They'll go over and invest in 10 or 20 of them, right? And all they're hoping is just one of them shoots up in value. Just one of them is what we call a unicorn, right? So just one of the companies is a unicorn, because that's all they need. If they've invested in 10 or 20 of them, well, only one of them they need to really explode in value. If the other 18 or 19 don't do anything, well, that's fine. But essentially what we're talking about here, I guess another saying you could say is don't put all your eggs in the one basket, right? So in my opinion, the goal is to, for me personally, to 10x my total amount of Bitcoin as it stands right now in the market over the next 12 to 18 months. Well, really over the next until by the end of 2025. And my personal goal is that I want to be, I want to have a, I'd love to personally have a fantastic property here. There's some beautiful places here in Australia, and you've got to have your own personal goal as well that you want to be able to do. But depending on how big and how high and how ambitious that goal is, that's also going to depend potentially on how big, how high your risk profile may be. Okay. So it's important to keep that in mind. But I always say to people, just because you may want millions and millions and millions of dollars and you're only starting with, say, $1,000, it's not always good practice going, well, I've only got $1,000, so I'm just going to put it all on the highest possible risk coins and just hope one of them does something. Because that's essentially gambling, right? That's what that is. That's not investing. That's gambling, right? You're just throwing a bunch of money out there and you're hoping for for the best. So essentially, what this is what we like to call in the industry spraying and praying. You're just spraying your money out there and you're just praying something works, right? We want to have some kind of approach. We want to have some kind of guidance behind what we're actually trying to do. Okay. Exactly right, Ep. Yes, VC stands for venture capitalist. That's correct. Yes, the VC approach is the venture capitalist approach. So I shared this in module 3 briefly, but I'm going to share it again here. So this is the VC theory for portfolio allocation. So essentially what we've got here is 10 crypto projects. Now, for me personally, I feel 10 is a really nice amount of crypto projects to have. It's not too little and it's not too much. It's a nice happy medium in my opinion. And if you look at this this graph here, you'll see that as a venture capitalist, for example, they would put some money down in each of these projects, and 2 of them have completely died. Number 5 and number 8 have completely died. Number 4 shot up the most. Number 1, number 7, and number 10 have done pretty good. And then under that, we've got a couple that have done okay, and number 3 hasn't gone that well at all. But the average kind of price of all these is probably somewhere in and around here. But let's say you took just the all-in approach and you just put it all in one project. Well, the problem would be if you just chose project 5, well, you'd now have no money, right? Because a lot of these projects can potentially just fizzle out and end up being worth nothing, right? If you had all your money in just project number 3, for example, well, then you wouldn't have as high as the average as what you've got, which is more so up here. If you had to just spread it out between 2 and 3, once again, you wouldn't have as high as what it is up here. So that's why, in my opinion, it's important to spread out over a number of crypto projects, a number of different altcoins, but doing it in a safe and succinct way is key to that. And that'll, in my opinion, add to your chances of getting more of a multiplication gain over this upcoming bull cycle. So what we want to be doing is we want to be avoiding these 2 common crypto portfolio problems that I see all the time. Now, number 1, like I just said, too few crypto projects. Now, this quite simply is you're not diversified enough to reduce risk if 1 or 2 projects fail to perform, like what I just shared before. If project 5 and project 8, you're only in those 2, well, what if they both die and fall away? You've literally done all your money. And the other issue that you have is that if you're in too many crypto projects, now I've seen this from thousands of students, people that are in my opinion, just way too many crypto projects, because quite simply, there's not enough capital in each of those projects that you've spread over them for winners to make much of a difference to your overall portfolio value. So you want to be looking for a happy medium. And in my opinion, a nice happy medium is around about that 10 number, right? 10, around about 10 different projects is, in my opinion, a nice happy medium. So what are the criteria for consideration when selecting crypto projects to invest in? So ideally, your investment should have multiple of these, right? That's the most ideal scenario. A popular narrative, right? So we talked about narratives in the last module. We spoke about narratives and the different narratives that I believe I showed you my top 9 narratives that I believe are absolutely key this upcoming bull cycle. So popular narrative is a key one that we want to have. The other thing is hype and momentum. Now, I'm not sitting here saying that I'm a believer in FOMO, which is essentially fear of missing out, or I'm a believer in hyping things up so then they shoot up in value. But the facts of the facts of the matter is that hype and momentum will always help push it will always help push up crypto projects, especially as we're going through a bull market phase, and then especially as we head into the euphoria phase of the bull market, which is essentially usually the last few months of the bull market. Hype and momentum is really the thing that pushes it to absolute all new highs. That's what we've seen in the previous two bull cycles, and I believe there's no reason why we wouldn't see a similar thing this time. A real use case, this is a big one. So is there an actual real use case for that crypto project? Has it just been created as a meme? Nothing against meme coins, don't get me wrong. I've had some great meme coins that I've invested in over time, but is there an actual real use case for that coin or that project? A reputable team, in my opinion, this is one that is quite often ignored, but I think it's a very crucial thing. Having a reputable, not just reputable, but also a docs team, right? So knowing who the team actually is, as opposed to just some random mystery developer that we don't know who it is or what they've done. So I think that's a key thing as well. Absolutely. The ability for the market cap to multiply, right? So this is a no-brainer. So we can make more money. It needs to go up in value, right? So by what I mean by that is ability for market cap to multiply is that when we invest in smaller capped coins, or coins that don't hold as much value as other coins, there's going to be much more chance of them to be able to multiply in price, right? Because they're starting from a smaller space, whereas Bitcoin, being the first and longest standing cryptocurrency, because Bitcoin was obviously the original one, it has less chance to do massive multiple gains in a bull market. It's going to do gains, but compared to what potentially other crypto projects can gain, often is quite a distance apart. And finally, good technology, right? Obviously, it's a no-brainer. It needs to have technology that is, and you don't need to be a tech whiz to know this, but it needs to, be at least performing at the same levels as what the current crypto projects are working at. So, for example, if it's a blockchain project, as an example, it needs to be performing at the same speed. The gas price needs to be in and around the same price. So the technology, what we're looking for is something that's revolutionary, right? So these are the kind of the key 6 criteria that I consider when selecting crypto projects to invest in. And these kind of molded my choices in module number 3 that you guys have access to, of why I chose those 10 particular coins for this upcoming bull market. Because once again, if we touch on the triangulation technique, this is, we touched on this before, the triangulation technique for choosing winning crypto projects. So once again, we're looking at different respected authorities, yeah? Respected authority 1 chose A, B, and C. Number 2 chose A, D, and E. Number 3 chose A, F, and G. So obviously, through the triangulation technique, yes, there was a bunch of other projects that were spoken about, but they're all kind of in agreement that project A is a project that can really potentially move in value. And once again, that was another reason for my choices that I made in regards to the coins that are picked that you'll find in module number 3. So here, let's talk about what I've just been speaking about before, which is the winning portfolio strategy. So what is the winning portfolio strategy? So essentially, it's 40% in Bitcoin, right? So why have we got 40% in Bitcoin? We've got 40% in Bitcoin because it is low risk and it gives us good long-term gains. It's as simple as that, right? It's the best performing asset in human history. It's gone from a fraction of a cent to being worth around $60,000 US in just 15 years. there's nothing like it. It's the most powerful computational network in the world. It's the hardest money that's ever been created. So to me, having 40% in Bitcoin's a no-brainer. The next 40%, to really start diversifying your portfolio, looking at high market cap coins, right? High market cap crypto projects. So these are lower risk projects, but they're still going to give you some good bull run gains, right? So this could potentially be looking at, your top 20 to 30 market cap projects. Now, once again, I'll go into this in a little bit more detail in module 3, so feel free to go check that out. But this is, like I said, it's kind of like your top 20 to top 30 crypto projects, which, as I just said, they're higher market cap projects. These are lower risk projects. And then the final 20%, this is where we start to be a bit more speculative. Okay, this is where we start to, I guess, push the boundaries a little bit more, and go into coins that have a much lower market cap. So these are coins that are much more speculative, and essentially, you're opening yourself up here to potentially, right? If we're just being completely straightforward with it, is that potentially you can open yourself up to a lot of these projects potentially going to zero, right? That is possible. It's possible for a high risk project to literally go down in value when you thought it would go up. Anything is possible in the markets, because the markets just simply don't care what you want or what you think. The markets do what the market does, right? So therefore, that's why it's essential, in my opinion, not to be investing any more than 20%. I think 20% is the absolute maximum, in my opinion. You should go in regards to higher risk coins. All right. And once again, I'll go into a little bit more detail, and I talk about the coins and why I've chose the specific coins in module 3. But yeah, that's the idea behind that. So if we compare the winning portfolio strategy to a higher risk portfolio strategy, so this is something that a lot of people I've found that have less capital, and when they're seeking fast gains, they seem to, and I understand, because they've got less money to start with, so they try and make up for it with going quite hard in their investments. But the issue you're going to have with this is that even if you started with a lower amount of money, there's a good chance, because of how risky this portfolio is, that you're going to end up with less or even nothing, right? So often what people will do when we're talking about this, they have a very, very small portion in Bitcoin. They'll do a probably, what's that, about a medium-sized portion, maybe 30%. So probably, 10% in Bitcoin, 30% in high market cap projects. But then what they're doing is then doing a whopping kind of 60% in high risk projects, right? And I see this so many times, guys, right? Now, don't get me wrong, some of these people's portfolios will make a considerable amount of money. Like, I'm not denying that. But what I'm saying is that, in my opinion, it's an extremely, extremely risky road to take. And I believe, especially with the upcoming bull market and what's kind of in store for us all, I believe it's a risk that you don't really need to take. Okay. Just to be clear, I don't think you really need to take that risk. But sharing this with you all, but if you were looking at something like this, this is most definitely a high risk portfolio strategy. Now, once again, I explained that in module 3, but in module 3, I really delved down and kind of try to share with you all the winning portfolio strategy, which is this previous one, which in my opinion will give you much better solid returns and longevity of your capital, which is the most important thing. If your capital doesn't exist anymore, right? If you had even if you did this higher risk one, and because you only had, I don't know, $1,000, and then your $1,000 ended up being $200 because, you know, a bunch of these low market cap, high risk coins disappeared. Well, what are you going to do then, right? Instead of having $1,000 worth of capital, now you've only got $200 worth of capital. So in my opinion, don't take the extra unnecessary risk and stick with a winning portfolio strategy, and learn from other people's mistakes. And move with speed on new high conviction projects. I think this is something that's pretty key in my opinion. Moving with speed in anything will always kind of, I think the saying here is in Australia, maybe there's other sayings throughout the world, but the early bird gets the worm, right? Though the person who moves first will win. So with smaller market cap projects, it takes less money for it to double and potentially even more than that, right? So if we look at a project that has, let's say project A, right, has a $1 billion market cap, right? So project A has a $1 billion market cap, whereas project B has a $500 million market cap. And project C has a $100 million market cap. There's a lot more chance, right, of you making considerable amounts of money out of project C and project B than what there is out of project A, because project A is already a $1 billion market cap. It's already had a pretty good run, right? Not saying it's going to disappear, just saying that it's probably, you know, already done a good run. It's starting to plateau out. It'll still move up in a bull market / euphoria market. But ultimately, you know, if you want to be making some quite substantial life-altering gains, then Project B's, you know, around that $500 million market cap, and then Project C, which is starting to get very risky, around that $100 million market cap, is kind of where it's at. Okay, as I said down the bottom, with smaller market caps, projects, it takes less money for it to double and even more than that, right? Triple, quadruple, and so on. So we're looking for coins that have a lower market cap. And once again, as I said in module 3, that's why I kind of talk about the coins that I have in there and why I have them. So what is market cap? So in definition, for a cryptocurrency like Bitcoin, market capitalization, or market cap, is the total value of all the coins that have been mined, right? So just to be clear, it's the total value of all the coins that are in circulation. So for Bitcoin, as an example, there's currently about 19.5 million off the top of my head that have been mined right up to now. And it's calculated by multiplying the number of coins in circulation. So in Bitcoin's example, it'd be 19.5 million. And you times that by the current market price of a single coin. And that's what gives you the market cap of a coin, right? So Bitcoin's current market cap is because there's, and once again, don't quote me on these exact numbers, but because there's 19.5 million Bitcoin currently mined, multiplied by, as it stands today, 60,000 US dollars, that equals the total market cap for Bitcoin. All right. And that's how a market capitalization or market cap is worked out, for those who are wondering. That's how essentially it's worked out. So if we want to really strip things back here and just keep things as possible, which is, because I believe the can you guys hear me? There we go. Check 1, 2. Yep. Sorry, the sound cut out there for a second. So yes, so let's talk about this next slide now, feeding the beast. So Feeding the beast is essentially essentially dollar cost averaging, right? So dollar cost averaging into the market. And I see this uh, common problem happening within our industry quite often, where someone may say, I've got $10,000 and they jump in 2 feet first and just buy all the crypto that they can possibly get in the first, 2 days that they're in. And then that's it. They're not doing any more, right? They've used their entire savings. They've put their $10,000 in. Now that's fine for someone who's going to just go, well, I'm happy with that. Now I'm going to walk away and just wait for it to go up in value. Happy days. But very rarely does anyone do that, because quite often, if you are that person that has done that, and trust me, I've been there before because I literally have done this. If you buy emotionally, which means that you essentially are buying, because you're freaking out that the price is going to go up considerably or whatever it may be. If you're buying emotionally, then you're going to be selling that same coin emotionally as well. Okay, so I always say to people that make sure that you have a plan before you purchase anything. Make sure you have a plan before you purchase anything, because, as I said, emotions are the killer here. The emotions are the killer that will set you back. And if you don't dollar cost average and feed the beast over time, as we say, I feel it's a great injustice on what you can potentially get out of this market, right? So this is an example of the two. So this is the first one, investing once initially, right? You got nothing in it, and then bang, you've invested. And then over time, it'll go up, down, up, down, up, down, up, down. It'll go up a bit more, up, down, up, down, up, down, up, down, up a bit more. But when we are, as you can see on the right-hand side here, investing consistently, and we're investing with conviction, then it's going, obviously we start here and we've got our initial investment, up, down, but then we're getting these little boosts over time, and it's pushing that amount up. So essentially what we're doing here is we're feeding the Bitcoin beast, and we're dollar cost averaging into the market, right? So dollar cost averaging here, and regardless of what the price is, right, it's going to go up, it's going to go down, it's going to go sideways, it's going to do all that. But if you're purchasing whatever that coin is that you're buying with conviction, whether that be Bitcoin, Ethereum, or whatever it is, then over time, as that coin goes through its cycles and keeps rising, you're going to be able to profit a lot more. So this is a super, super basic way of investing long term, as opposed to just putting all your money in at the beginning. Because what can often happen is that, as I said, there's two things that can happen. Number one is that if you've just jumped all in with everything, you're bored emotionally, which means you're going to sell emotionally. You're never going to be in a good place. Or if you've just bought in straight away with everything else, with everything you've got, or what if price drops 40% the following week? You've got no dry powder there, as I like to say, or you got no capital there ready to invest more. So you don't want to miss out on opportunities where the market drops, because that's when you can essentially really capitalize when the markets have its drops, which is inevitably going to happen. And we'll see them consistently. We'll see consistently crypto having 20, 30, 40% drops, even more, especially after euphoria of a bull market. We're going to see significant drops, and that's going to occur. Now, the other big thing is here that we want to be periodically rebalancing our portfolio. So this is a crucial part, in my opinion, of profitable portfolio design. So let me try and spell this out as clear as I can. Number one, we want to be selling, in my opinion, for a profitable portfolio design, we want to be selling underperforming assets. Now, let me be clear when I specify what I mean here. there's an example, and I'm just going to use this as an example. All right. If you have this coin, it's not meant to be a dig at you, but I'm just going to be very, very clear. There's people, a lot of people that I know that have purchased XRP, right? Back in 2017 and beyond. Some people in 2017, they purchased it for as much as $2.50, $3 a coin. It's currently sitting at around 60 cents or something, right? Now, it may in the future, in the near, mid, or distant future, go considerably up in value, right? It may do that. But for those people that have purchased XRP and have just held it and have just gone, nah, that's all I'm doing. They've just gone all in on XRP on one coin. They've thrown all their money in the one, all their eggs in the one basket. Then they've missed out on life-changing gains from all the other coins around it, right? All the other coins have performed, nearly all the other coins, not all of them, most of the other coins in the top 10 have blown XRP out of the water in terms of growth and profitability since 2017. So selling an underperforming asset, in my opinion, and another way of saying this is just cutting your losses and moving on, I think is the best way to rid your portfolio of an underperforming coin and move it into something that you're much more convicted in. Now, if you're still got just as much conviction in that particular coin that you had when you purchased, then no problem. Stick with it. Keep going with it, right? That's fine. But it gets to a point where you've got to go, enough's enough, right? We want to be adding to our high performing assets. Essentially, that's what we want to be doing, right? We want to be getting out of our underperforming assets, and we want to be adding into our high performing assets, right? So anything that's kind of flat, down, consistently not doing anything, in my opinion, sometimes you're just better off cutting those losses and getting out and getting into a narrative or into a criteria that is much more bullish, right? And actually is moving and doing something. So anything that has a popular narrative and momentum that you have conviction with, they're the kinds of things that you want to be consistently keeping up to date with, right? So this step may give you an extra 10 or 20% or maybe even more out of your bull run, because this is where you can consistently adapt. And this is this is one of the big things that I very rarely see people do is adapting, right? That's one of the very rare things that I see people do in this market is adapting to their to what's going on, right? So I think it's crucial. Excuse me. I think it's crucial to adapt and to just bite the bullet, move on, get into a higher performing asset, and go from there, right? Buying new assets with momentum and conviction, in my opinion, is key to consistently keep growing your portfolio. And as I said, rebalancing your portfolio is a key part of profitable portfolio design. We need to keep adapting. We can't just stop. We need to keep adapting and keep trying to stay on top of what we think. Now there is a fine line here, and I'm sorry to be still on this point, but there's a fine line between adapting, getting out of underperforming assets, getting into assets that are actually doing something, and consistently playing around and fiddling around with your portfolio. There's a fine line between those two things, because essentially, there's a lot of people that just consistently, this asset hasn't moved for a day. I'm selling it and I'm getting out into something else. This asset hasn't moved for the last 3 days. I'm selling it out of that and getting into something else. That's, just to be clear, that's not what I'm talking about. What I'm talking about is sustained and long-term uh, plateau, right? Sustained and long-term zero movement. That's what I'm talking about, right? XRP is a perfect example of something that's had sustained and long-term very little movements. Okay. That's what that, and once again, I don't mean to be picking on any XRP holders out there, but I'm just giving a great example of a coin that has consistently underperformed for a very long time. Now, maybe that particular coin, along with lots of other coins, will start performing fantastic. But it comes to a point where it's like, well, what if it doesn't? Well, maybe it's a time to start adapting and realigning into something else. Yeah, so Jenny's saying I've been holding Win for a long time, which is down a lot. And that the other saying for that, Jenny, is kind of like sometimes at the end of a bull run and prices start dropping down, a saying is you kind of left holding the bag, right? You kind of left holding the bag of coins that are not performing very well. And we've all been through that process. I know that I went through that process in 2017 where I was left holding a bunch of altcoins that were just I was gonna use a naughty word there, guys. Complete rubbish, right? And not doing anything. And there comes a point where it's like, well, you know what? It hasn't done anything for a sustained period of time. I can justify it over the charts here. It hasn't done anything for this period of time, and maybe compare it to a high market cap coin. So a great thing that you can do is compare it to how has it performed against Bitcoin, or how has it performed against Ethereum? And if it's considerably less over the last few years, then in my opinion, and what I do is I cut that off and I use whatever capital's left there to move into something that that is much, has much more of a chance of doing something. Exactly, Michael. Yes, you could swap it. You could swap it into another coin. Maybe maybe what you do, maybe it's the 10th coin in your 10 coin portfolio, Michael, and you choose another 10th coin and you move into that. Or maybe what you do is you're like, what, I'm convicted enough on these other 9 projects, and whatever capital you have left in the 10th, you just spread out with the other 9. So there's a couple of different things you could do there, but essentially, there just comes a point where you need to draw a line in the sand and go, all right, enough's enough. So rebalancing your portfolio. Okay. So, periodic review of crypto project performance, reallocate funds from underperforming assets to higher performing assets. All right. Quite simple. Chart's very simple. Underperforming asset being number 1, we want to move some capital over from number 1 into number 2, which is an asset that is consistently giving us some return, right? Like I said before, asset number 1, it's an asset that it shoots up every now and then, but then as fast as it shoots up, the next 2 days or 3 days, it's back down again, right? That's that in my opinion is a key sign to move on and get out and start getting it into another coin that you have conviction in, right? So we want to be moving capital here as another example from project number 3 to project number 4. Okay. Now it's important, once again, as I touch on these points and talk about them, and I know that we've got a lot of beginners here watching this video. We shouldn't be moving into a project that has already shot up in value. So let me be clear again when I'm talking about the rebalancing of a portfolio. We want to be moving into another coin, but not, in my opinion, another speculative coin, because you could be moving your capital quite simply from an underperforming coin into a speculative coin that has already done massive gains, right? And the chances of that coin doing any more massive gains is probably just about done. So in my opinion, you're better off moving out of underperforming coins into what I've said here, a high performing asset. Now, what's a high performing asset? Well, in my opinion, a higher performing asset is Bitcoin, Ethereum, is coins that are essentially, let's say, in the top 10 or 20 coins, right? So moving your capital out of a underperforming coin into a asset that is a high performing asset. All right. And a high performing asset is not some random small speculative coin. A high performing asset is essentially a high market cap coin. All right. So that's what we want to be doing. All right. So let me know in the chat. I know we've got some people here live, which is fantastic. Does that all make sense? Is that clear? Let me know in the chat just before I move on. I just want to make sure I'm crystal clear on that. Just put a yes in the chat. Let me know. Yep. Okay. Awesome. Plenty of yeses there. Okay, cool. Some questions there as well. Yes, we will answer questions at the end, guys. Okay. All right. So that brings us to our screen here, which is the next module, okay, which is going to be timing for maximum profits. All right. So this is where we're going to really cut into to ensure that we have the timing perfectly before we're moving into our assets, so we can maximize our profits as much as possible. So let me just check the chat here. There was a few questions, so please drop any questions as well if I missed yours. Mike and Maureen have said Arbonne Uni with a question mark. Do you mean, are they underperforming, Mike and Maureen? I haven't even checked those charts, so it's probably something that I'd need to really look at. Andrew has asked, quick question, was watching the interview you did a few weeks ago. Think of. Okay, so I don't really comment on other people's portfolios, Andrew. This program is really about what we're doing here with the Crypto New Rich, winning portfolio. But yeah, look, by all means, it could be something, Andrew, that you potentially look at from other sources and go, okay, is this a respected authority? And if you consider that a respected authority, then you would go, okay, cool. Well, respected authority 1, respected authority 2, respected authority 3, and if they've all got the same kind of general consensus. But yes, that would be the way to go. Yes, Solana. Yes, Solana essentially is, look, Solana, what it essentially is a layer 1 technology which essentially has the ability to have layer 2 protocols laid upon it. It's in my opinion, it doesn't match the criteria of a store of value. Like, a store of value is Bitcoin. That's in my opinion, store of value right now. Bitcoin is the only cryptocurrency that is a proper store of value, in my opinion, as of right now. Now that opinion of mine may change in the future, but as of right now, I believe that Bitcoin is the only true cryptocurrency that has a store of value. Not saying that the other cryptocurrencies, the other 20,000 odd, don't have any value. Of course, they got value, but as far as being a long-term digital asset, digital gold, whatever you want to call it, nothing is comparable to Bitcoin, in my opinion. It's the one true coin, right? I think we can make extra gains from these other coins. I think the other coins have purpose. I'll use the example of Ethereum. I think Ethereum has some real world purposes. Obviously, it massively helps with the layer 2 technologies that are getting made on top of Ethereum. It makes it quicker. It makes it um, cheaper and all those things. But ultimately, as far as store of value is concerned, Bitcoin is really where it's at. Yeah, exactly, Michael. Maybe in the future, when it gets used more, different coins could potentially look into, and we could start considering different coins as potential stores of value. There's really no excuse me, really no comparison to Bitcoin at this stage as far as a store of value is concerned. Johan's asked a great question. How often would you recommend we review and rebalance our portfolio in a low to medium risk setup? Yeah, great question. So I would say monthly is I find is a good kind of a good kind of period to do, Johan. So I would say once a month is good. Any more than that, you can kind of start playing around just with no need. Like there's no need to be playing around any more than a month in between. Even a month could be potentially too short to be rebalancing and reviewing your portfolio. I actually most of the time I'm doing mine quarterly. As a beginner, it could be good for you guys to do monthly just so you get in the habit of doing it. But anywhere between 1 to 3 months, I think is good. Yeah. Because I'm quite convicted with the coins that I've got, I'm happy to do it on a quarterly basis. But yeah, anywhere between kind of that 1 to 3 months, I feel is a good time frame. Yeah, you're welcome, Johan. All good. Thank you, George. No worries at all, mate. So let me just check to make sure I've missed no questions. I think we are good. And as I said, for those who are watching the recording, we will be back with the following module, which is timing for maximum profits, which is a very crucial module. We want to make sure our timing is always good. Just send an email to our support channel. So support at fastlaunchddigital.com. And they can have a look at your question for you. So support at fastlaunchddigital.com. All right, awesome. So if you are watching this as a recording, if you do have any questions or anything that we've kind of spoke about in this session, this module that you want clarification on, please reach out directly to our team. So that email address, once again, is support@fastlaunchddigital. So all one word, support@fastlaunchddigital.com. And the team will be able to help and support you as much as they can. Thank you, Robert. Your book's fantastic. Great job. Thank you, Robert. I appreciate it. Dominic has asked, if rebalancing, what fees will there possibly be that might make it not worth changing? Yeah, it's a good question, Dominic. It all comes down to what coin it is, right? So, and it comes down to the amount as well. So most of the coins that I've shared with you all in module number 3 in my winning portfolio, there shouldn't be too many issues with prices in transferring. I mean, gas prices on Ethereum could be a potential issue. But that's kind of inevitable. One thing to look at, Dominic, so thanks for bringing this up actually, is that the smaller your portfolio, so if you've got, for example, a $1,000 portfolio, the more I would say to stay in your positions with conviction, because yeah, if you're consistently every month swapping coins over, you're going to consistently be eating away at your overall balance, right? So maybe, in the scenario of, I've got a smaller balance, potentially around $1,000 or something like that. The way to go would be to, more so look at your periodic reviewing and rebalancing every 3 months, say, right? To give it a better look over. Patience is most definitely needed at the moment, Michael. I cannot stress that enough. We need to ensure that we have the ultimate patience. And yeah, we're here for the long haul. We're here till at least the end of 2025, where we believe, based on the last 12 years of data, is going to end us in a very nice spot. That is the plan. So, awesome, awesome. So thank you very much. Thanks for everyone who attended here live. Thank you for those who are watching the recording. Thank you for joining us. Like I said before, if you do have any questions or anything to do with this module, please send that question to support@fastlaunchddigital.com, and we will answer and help out as much as we can. Other than that, thank you again. Thanks everyone saying thanks in the chat. Appreciate it, guys. And I will see you in the next module. All right. Thank you all very much. It's bye for now.